Hi, everyone. I have a special announcement to make. As you know, the mission of our podcast is to affirm, inspire, and motivate HOA board members. One way we hope to do that is with the launch of our new board member merch store. As a gift to boards who are meeting online, we're offering dozens of free and fun Zoom backgrounds designed specifically with you in mind. We've provided a link to the new store in our show notes. Please check it out.
But when you start accusing the manager without adequate proof, you're now tapping into something else. He can come back after you and say, wait a minute, I have a reputation here in this community. I have 30, 40 associations. If you start saying that I am not capable of handling the money, or I'm not capable, or I'm stealing money, which is even worse, then all of a sudden I've been damaged. And now you're talking about a whole different set of liabilities, a whole different set of circumstances that you as a board member, because you let the information leak out of executive session.
HOA Insights, common sense for common areas, exists to help all 2 million volunteer board members nationwide have the right information at the right time to make the right decisions for their future. This podcast is sponsored by 4 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Hi, I'm Robert Nordland of Association Reserves.
And I'm Kevin Davis of Kevin Davis Insurance Services. And this is HOA Insights, where we promote common sense
For common areas. Well, welcome to episode number 55, where we'll be speaking with insurance expert and regular co-host Kevin Davis to talk about what happens when an insurance claim occurs at your association. Well, it's always great to be prepared for what's next, and that's what this episode is going to be all about. But before we get going, I want to encourage you to check out last week's episode number 54. It was a fun and interesting discussion with a very conversational guy, Mitch Drimmer of Axela Technologies, about maximizing your cash flow by minimizing money that's tied up in homeowner delinquencies. Cash is the lifeblood of your association, and you need to be running your association like a business, watching the income in addition to the expenses. So if you want to catch any prior episodes, you can listen from our podcast website, which is www.hoainsights.org, or watch the podcast from our YouTube channel, or you can simply subscribe to the podcast from any of the most popular podcast platforms. Now, as we regularly do, we're going to start this episode out with an audience question. So if you have a hot topic, crazy story, or a question you'd like us to address in an upcoming episode, leave us a comment or a question on 805-203-3130, or send us an email at podcast@reservestudy.com. So Kevin, today, Nancy from New Jersey asked, we suspect our manager of fraud with our reserve fund, siphoning off over $1 million over the last 10 years from friendly vendors. Now the board is being accused of allowing this to happen, but it was the manager that gave us doctored reports. I guess that's what they suspect or what they're thinking. What do we do? Well, so Kevin, what do we tell Nancy?
Okay, well, this is a great question, and there's a lot of Nancys out there who's wondering the same thing. Because whenever the board of directors go to the bank and look at the reserve account, the operating account, the first thing they do is say, wait a minute, there should be more money in here. What's going on?
Well, let me stop you right there. You said they went to the bank, but so many times we hear the wise counsel that make sure you're getting a statement right from the bank, or logging in and seeing the real numbers, because we don't want to be subject to potentially doctored reports.
Yeah, exactly. And what does that doctor report is? And again, a lot of the stuff goes back to one simple thing, and that is we suspect our manager of fraud. That is a problem in itself. And that's what the Nancys in the world are out there, whoever they are in these condominium associations, who think money is missing, who think some of the reserve account is missing and some of the operating account is missing. They feel that it's missing. And because they look at the report and the report is doctored, but it could be that the property manager may not want to give all the information out. They wanted to give you part of the information. There might be reasons for it, but you don't know. So in other words, you can't start with suspect. You have to have knowledge.
Right. Well, you do start with suspect, but you don't start with a hard claim, because then all of a sudden that's a different problem, and we'll get to that in a moment. That's another claim. But I'm just thinking in my brain, maybe they knew that the reserve fund was roughly 100 grand. Next month they find out it's 50, and instantly they suspect something, but they don't realize that the manager gave the $50,000 deposit on the job to the roofer according to
That's
plan.
it.
And they could just have forgotten that.
Mhm. And when you talk about siphoning off $1 million over a 10-year period with friendly vendors. Now, what does that mean to me? What I hear is that you look at outside and you see the property manager with a brand new car. And you see his vendor buddies with brand new cars. And so you go to the bank and say, guess what? We should have more money in here. I mean, that's how these things happen, Robert. It's not a matter of, they suspect it because there are certain things that are inconsistent with their beliefs. And their beliefs are, there should be more money in here. It takes a brand new car for everybody to go in and go, wait a minute, let me check on my financial statement and make sure things are looking the way they should. And wait a minute, look at that landscaper that he said we should use has a brand new car. Yeah, what's going on? And then, oh my God, we're being ripped off. And what happens is that they go to executive session. The board goes to executive session and says, I think we have a problem. And then it leaks to everybody. You go to the pool, now you're out of the pool, and somebody says, the manager ripped us off. We used to have $1 million in reserve account, and it's gone. We don't know what's happening. And one person may say, well, we got new roofs. Oh, we had to redo the pool, remember? No, that's not what it is. They ripped us off. You see, he had a new car, and that's how the rumor mill starts. So now have a rumor mill going, and you have no proof at all that anything has happened. This is a problem for community associations. They start with a feeling instead of facts.
Okay, so the first thing to do is make sure that your feelings have substance. Don't let it go to the rumor mill first. I like what you said, go to executive session, contain the subject, contain it. I guess the next steps would be advice of counsel, maybe getting a CPA involved to double check the books, those kinds of things. But
a police report. Call the police. If you really suspect, if you have documented proof, call the police and say, I believe, there's embezzlement. And the police can even help you go through it. You can say, well, what proof do you have?
Yeah.
And then you can go through the proof, but please keep it in executive session. Now the board is being accused of allowing this to happen. The board is accused of what? Allowing what to happen? The theft of the funds, or that allowed all this information to get out, and prosecuting this manager who may or may not have done anything wrong.
Boy, I'm almost stopped dead cold by thinking of all the problems that have created by maybe something as innocent as, like I said, just giving a deposit to the asphalt person for the big asphalt project, or the roofer, or those kinds of things. We have to be really careful, because in times we've spoken before, there's reputations, there's false things going on, and when you're damaging someone's reputation, that's a big deal.
That's a big deal, especially somebody, again, if somebody accuse you of stealing from the association because you got to pay, let's say you charge $1,000, and all of a sudden this one you charge $1,500, and all of a sudden that means you stole $500 from that association. You got a kickback $500. So we're accusing you right there. So now all of a sudden, wait a minute, your reputation now is being damaged. I'm not going to, as an insurance person, let's say all of a sudden, Nancy sends me that claim. It says, Kevin, guess what? I'm submitting a claim. You write my insurance policy, and I want $1 million from you because I suspect. Well, I can't. I will say, Nancy, give me proof, because I can't say that the manager stole the money. I can't do that. You got to prove to me that the manager stole the money, and that I will reimburse you for those funds. But you need proof.
Yeah. Okay. And
it could be hard to get proof from an association if they're not doing their due diligence. They're not doing the right job. If they're not getting their monthly statements, they're not reviewing the monthly statements, then how are they going to know if that person been doing anything over the past 10 years or not?
Yeah. And there was one other telltale in this question about siphoning $1 million over the last 10 years from friendly vendors, plural. It's always good practice to have two people co-signing a check, things like that. And it's one thing to get a friendly roofer who, wink, wink, you can overcharge and they'll split the overage, things like that. But the roofer, the asphalt, the pool. That's going to be hard to do, to stack so many unscrupulous people on the side of the manager. That's a damaging and difficult claim to be able to try to make.
Not only is it difficult, what happens now, you go back to, if I'm the manager and I did my job to the best of my abilities. Now, I may have even made a mistake. You may have found that, oh, guess what? The doctored reports I should have given you the original. Here's the original. And the original say the same as the doctor reports. They're not doctor reports. These are reports that I carved out some information that belonged to another association, or it wasn't your information, or it was my information. But here they are. Here's the original. You could have just asked me for the original.
Yeah.
That would have been there.
Yeah, I think quite often when I'm speaking to you, the root of the problem is doing your job and doing your job well. It may be that, let's say this roofer was going to charge $100,000 for a project. If you went out and got proposals, hopefully all three proposals are in the same general range. And so it's not like you're hiring the most expensive, just crazy, or without knowledge. It could be that, yeah, you got an $80,000 proposal, $100,000 proposal, $120,000 proposal. One of them has a slightly better warranty. Maybe one of them is able to start earlier. Maybe one of them promises to clean up the place every day, so you're not left with a mess overnight. There's different reasons for different costs. But to just jump and think the worst of someone, that's trouble.
And I think the key to what we're talking about today is, right, Nancy's first, we suspect our manager of fraud. That happens way too often. If you suspect, then you do your due diligence to find out, why do you suspect? Why? What happened? Okay, you received doctor reports. Did you talk to the manager about these doctor reports? No, I did not. First thing you do is talk to your manager. Now, if you go to the manager's office and he's gone, it's closed, and nobody's there, guess what? You got proof that your money is gone, And that's what happens. Sometimes you walk into a place and you go, nobody's there. What happened? It could have been,
like they fled. They could have fled to Mexico or something like that.
Exactly. That happens.
Okay.
And then all of a sudden you have proof that your manager stole your money. The manager could have been duped into getting the money. He could have been conned out of the money, and that's a different situation. He could come clean and say, guess what? Yes, money is missing out of your reserve account because somebody tapped my computer and had a transfer of money went out, and right now my insurance is looking into it. I have a cyber policy. So there are a lot of reasons why, but when you start accusing the manager without adequate proof, you're now tapping into something else. He can come back after you and say, wait a minute, I have a reputation here in this community. I have 30, 40 associations. If you start saying that I am not capable of handling the money, or I'm not capable, or I'm stealing money, which is even worse, then all of a sudden I've been damaged. And now you're talking about a whole different set of liabilities, a whole different set of circumstances that you as a board member, because you let the information leak out of executive session.
Right. Because it's one thing, this manager, that's their career, it's their livelihood. They've got credentials. This is what they've been doing, and hopefully they enjoy doing it. And if you're accusing them of something that's going to get them fired, lose their standing in the industry, what's this person going to do for a job? That's big trouble. We suspect our manager of fraud. Now the board is being accused of allowing this to happen. There are steps, right? And we're talking about doing the right steps, being careful. You spoke about executive session. That's one good step. The other steps, we've had episodes in the past. I think it was Russell Munns from Community Financials talking about getting those original statements. But Kevin, I like your idea that, it could have been just the manager took a screenshot just because it was simpler, because the manager was trying to make it a friendly document for the board to read, because the manager knows the board's busy. Just be careful as you take those first few steps. You hire a manager because you want assistance. How far is the board responsible to go to review the manager's work until the board's doing the manager's work all over again?
All right, so this is the issue here. It's two things. A, did the manager take the money or not? And if he did, what did you do? If you didn't take the money, but there's money missing, if something's wrong, what did you do? So there's two things you got to do. And you're right. You first start with executive session and say, okay, what's going on? What happened with this money? And then you get the documentation. I have documentation here that says there's $100,000, there's $30,000, $10,000 every single month over the past 10 years that's unaccountable for. We see it right here, unaccountable for. Okay? So we go to the manager, and the manager says, we don't know. So now all of a sudden, you got to figure out, okay, so we're going to say that the money's missing. The money's missing, and we have documentation that the money's missing $10,000. We can pinpoint exactly, and we can see that somebody from the management office has done it. Okay, so maybe not being the management, the owner of it, but it might be Bill in the back that he's been the one that's been siphoning off money by writing checks in the name of the association and cashing them at a different bank. Okay?
Interesting.
That's how we
So
find out.
Yeah, maybe the management company, but it may be someone else other than your manager who is honestly trying to take care of things. There's so much money coming in, so much money coming out, that it may be a little bit lost. And I'm starting to wring my hands, just worried about how many ways that can happen. But we don't want to say bad things about management companies because they fuel associations and boards being able to lead an association while the manager does the hard work. But
Well, the treasurer could do the same thing. I mean, it's not just the manager. The treasurer has the same responsibilities also.
Yeah.
The treasurer can look at that reserve account of $1 million and say, guess what? I'm going to siphon off $10,000 every single month and say the reason why I'm doing it because I'm buying, light bulbs. I'm spending $1,000 of light bulbs every single month. And nobody's going to question that. If it's small enough and it's below it enough, people will do certain things that will enable them to take that money. So there's two things happening. So number one, the board of directors actually got proof that the money has been stolen. And it does leak out. Let's say it leaks out that, one of the executive session, one of the board members talks to, their children heard it over the phone or something, and it leaks out. And now all of a sudden, the board is being accused of allowing this to happen. Well, the board did their due diligence. They said, yes, we understand this happened. We have an insurance policy, a crime policy that we submitted a claim to and waiting to hear back from them right now. So now all of a sudden, if there's a lawsuit against the board or if there's a claim made against the board is feeling, we did our due diligence. We found out what was going on. We looked at all the information, and it was hard for us to spot it. The bank called us up and said, we got this check in that's different than the other checks. And then we found out, and soon we found out, we called the police. Okay? We got our lawyer involved. We got an insurance carrier involved. We're upset. We're hurt that the people who live there are upset with us. But guess what? We did our job. We did our due diligence, and we expect to get our money back from our insurance carrier because we have a crime insurance policy, and it's equal to what it should be. It's equal to 3 months assessments plus the reserve account because we did our job properly. So we have the reserve account and 3 months assessments. And so if the reserve account is missing, we will be reimbursed as soon as documentation go in.
Yeah.
So guess what? Unit owners, we are okay.
We're going to be made whole. Well, I like what you said there that, yes, the problem happened. Bad things do happen in life. But this board, they caught it in a timely manner. They were well insured. They're working the steps through the problem, and they're going to come to successful resolution. It may mean that your reserve fund is low for a little while, and you may have to push the roof project off till next year for everything to clear and to get made whole. But it's what the board does. The board takes care of the common areas.
And it goes back to what we always say, Robert, is that if you lower the temperature and not get too excited, not panic, and say, wait a minute, we have an insurance policy that does exactly what we needed to do right now. And if we follow the formula that CAI, Community Association Institute, says, which is we have a crime policy that's 3 months assessments plus the reserve account. So the max people we believe that can walk away is the entire reserve account or the max of 3 months assessments because it's hard to get more than that because the assessments keep going out. So if we do that and somebody steals it, guess what? We should be okay. And now that board is listening and feeling pretty good about it.
Yeah, because insurance is for accidents, and sometimes accidents happen, and sometimes those accidents are someone that you trusted not being trustworthy. Well, let's take a quick break here to hear from one of our sponsors, and we'll be right back to a follow-up where we left off.
Are you part of a homeowners association or condominium board? Making the right financial decisions for your community's future is crucial. At Association Reserves, we're proud to serve communities nationwide, specializing in reserve studies tailored to your community's unique needs. Our expert team helps you accurately assess your property's assets, forecast future expenses, and develop a solid funding plan. Whether you're a small HOA or a large condominium association, we've got you covered. Visit reservestudy.com to learn more and get a proposal for your association.
And we're back. Well, Kevin, you left us on kind of a high note where the insurance made the association whole. Maybe it takes a little bit of time, but everything's going to be okay. I love stories that end with everything's going to be okay. But tell me about the situations where either the insurance doesn't make you whole or you're not well insured. Tell me about the problems that are going to continue to be a problem at the association.
Yeah. There's two problems the association has. Is that either it was something that wasn't insured, okay? That means they have to make it whole themselves, or insurance wasn't adequate enough. And what happens is that a lot of times when you have these big claims, that $1 million claim, the crime insurance limit is too low, meaning that they say, I want a $25,000 or $50,000 because I believe that the board is somebody can only steal the operating account. They will never touch the reserve account. Or we don't know how much money is in the reserve account, or we forget about the reserve account. And so they have a low limit because guess what? It's cheaper to have a $50,000 limit than a $1.5 million limit. So we go with the cheaper one.
Which comes back to budget.
Yeah. Yes. So you buy the cheaper limit and you have an insurance person who sells you that lower limit who doesn't understand community associations. So you pick somebody who says, guess what? I got you a great deal. It's $50,000 limit. It was standard in the industry because everybody has $50,000. Not knowing that if you are a community association specialist, you have to have 3 months assessments plus reserve and add the management company to that policy. The management company has to be an additional because they control the money. Only if you are a specialist involved in community association, you understand that. So number one, if you hire somebody who knows nothing about it, you have a $50,000 limit and no manager cover.
And I'm thinking it comes back to budget. If the only thing you're looking for is the lowest cost insurance, you may go with someone who, yes, can say those words, it's standard in the industry, but may not know that maybe it's standard in their industry.
Yes.
Insuring association of brokers, association of dentists, associations of
reserve study specialists,
or association of soccer coaches, or whatever it is. What we're talking about is community associations, and that's a different animal.
You look at what you're doing right now, your company, you may have a $50,000 crime policy because the most anybody can steal from you is $50,000. You're not worried about it that much because you don't have a lot of cash there. But these boards have reserve accounts sitting out there that people want access to, that people want to steal. Not only the managers, but you have, people who just want to target that information. And if you don't have an insurance policy that equals that amount, now you're going to that reserve account, you're going to the bank and saying, we don't have enough insurance to pay for this claim. The manager's not covered under here. The treasurer may not be covered under there. It may have been stolen by somebody else, a third party. A criminal could have gotten involved in here. A cyber person could have gotten there.
Yeah.
And the money's gone. Now what do I do? And that's when it comes to issue, because now all of a sudden you have to replace that money. And you replace that money, how? A special assessment, because that roof still got to be done, So now you're going to a special assessment, and now guess what's going to happen? Now the board's being accused of allowing this to happen. See, the board's not going to accuse you of doing it until, guess what? It impacts me.
Right.
So if the board loses that $1 million, the board's incompetent, they're stupid. Yeah, well, I can't believe it. I'm glad it didn't happen to me. You know how we all believe that. But then all of a sudden, when you want money come out of my pocket, okay, because that board did something wrong, now I'm suing the board because the board allowed this to happen. They're not going to sue until it impacts me. Either I have a special assessment or a loan or something to pay for the roof that somebody stole the money for.
Someone's going to Mexico on my roof money, and now it's going to cost me a $1,500 special assessment. And there's some bad guy in Cabo or Costa Rica living the high life on my money.
Yeah.
Kevin, I guess I always assumed that if it was a criminal, the client, the bank, the whatever would be made whole. But I guess that's not true. Sometimes, like you said, there's two parts of it. One is, was it an inside job? Was someone sleeping when they should have been looking after it? And are you adequately insured? Even do you have the insurance?
Exactly. You have to be adequately insured, and most associations are not because they don't have the reserve money insured, okay? Meaning that reserve account grows and expands. They leave it alone, and they worry about the $50,000 operating money that goes in and out that the treasurer may have access to or the manager may have access to. They don't realize that everybody is targeting the reserve account because that's where all the money is at. And it has to be adequately insured.
Yeah, that's the big money. Yeah. And I bet, I didn't know. Of course, I am on the reserve side, not the condominium association side, but we see a reserve fund over the years, and it is low. It grows, then you spend it. It grows, and they spend it. And I bet there's so many associations out there, and I hope there's board members out there thinking, oh, gee, we should check because they may have set the reserve fund limit at $50,000, but now they've got $275,000 because they're growing it in anticipation of a roof job or an asphalt job, and that number that was totally fine 5 or 10 years ago is not totally fine today.
All right. Let me give you an example of a $1 million claim. This is a $1 million claim. It's a huge co-op in New York City. They've reserved a lot of money over the years to replace all the fans inside in the stove. In the stove, they have these little fans in there. So it's time to replace every last one of them in association. There's $1.3 or $1.4 million there in reserves, and they gave the $1.3 million to the manager, one individual manager, the on-site manager, and the person who's supposed to install them, disappeared with the money. So $1.5 million is gone. They had a $250,000 crime policy, okay? They saw that money was missing, and they saw they were gone, so a $250,000 check was written. The manager was in shock, too, because the manager didn't get anything, but the owners, the whole management company didn't get anything. One individual manager who lived at the association and the contractor got $1.5 million. And they found out because they couldn't find any of the fans. They said, what happened to, when are you going to start the job?
Yeah.
They went and looked, and everything, there's no fans there, and the money's gone. What happens now? Insurance did their job. You didn't have a $1.5 million crime policy. You had a $250,000 crime policy because that money grew. It went from 100 to $250,000 to $1.5 million. Yep. So now when it happens,
as it should.
So now you end up with a lawsuit against the management company and the board of directors because, just like Nancy said, because they're accusing it, allowing it to happen. Now, what happens now is the lawsuit comes in, and your direct and officer liability will defend it. But the judge may say it is not the board member's fault that it happened. The board did their due diligence. They did the job. You're out of, you got to figure out another way of getting the money other than insurance. In other words, if the judge says you did your due diligence, but there's still a demand against you of $1.5 million, we will pay the demand. But the judge may not say that. The judge may say you did your job appropriately, and you still got to figure out a way to get that $1 million. This just happened a while ago. This is something I just saw myself.
Yeah.
And going, wow, it gets complicated.
Yeah, it gets complicated, but it makes me think that in life, sometimes bad things happen. Sometimes you have a car wreck. Kevin, there's times when I get an expensive repair on my car. I spend a couple $1,000s on my car, and I think, now's not a good day to get in an accident because I just spent money on the car.
Yes.
Yeah, sometimes bad things happen. And if the board is at least doing their responsible job, it minimizes their exposure. Like you said, D&O insurance will defend them and find out that, bad things happen. It's unfortunate. But the bottom line is maybe shoulda, woulda, coulda been better insured. Is that the summary here today? It's a reminder to our board members to look at your level of insurance.
I would say this: talk to a community association specialist and say, I'm concerned about my reserve account. We have a lot of money here in operating account. How do I best protect this from a loss by a vendor, a homeowner, a cyber specialist? There's a lot of things out there who want my money. I want protection from it. And let that be up to me, the specialist. Just like, you want people to go to you and say, you know what, I got a roof here. How long that roof's going to last? I feel it's going to last another year or so. But what do you think? I feel $50,000 of my crime is good enough. What do you think? No. How much in your reserve account? It should be equal to your reserve account plus the operating account for 3 months. And then you should be okay. If you did that, guess what? $1.5 million are missing. Here's your check. The only thing to worry about.
That is it's unfortunate, but it's a happy ending. And I like that. Well, Kevin, it's always great talking with you. Any closing thoughts to add at this time?
No, just a specialist. Make the informed decision by looking at a specialist that understands it. Go to your lawyer, go to a police officer, and go to your insurance specialist.
Yeah.
When something like this happens.
Yeah. And it starts with budget, having made the right decisions and being okay with spending a little bit more to be well insured. And there's so many other good decisions go from those little decisions that you make as a board member.
Yeah.
The little decisions that add up to prevent you from having a big problem. Well, we hope you learned some HOA insights from our discussion today that helps you bring common sense to your common area. We look forward to having you join us for another great episode next week.
You've been listening to HOA Insights, common sense for common areas. You can listen to the show on our podcast website, hoainsights.org, or subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. Check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing that you can do is engage in the conversation. Leave a question in the comment section on our YouTube videos. You can also email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members that you know. You can also support us by supporting the brands that support this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.